Good morning. I'm Steve O'Hare from Signal Centre. This is Talking Bull. Welcome to our 852nd edition. It's the 24th of May, and we're going to dive into the news headlines over the last 24 hours, see what's coming up, and look at the technicals and try and give you some idea of where we think the markets could be heading by looking at the technicals and considering what's going on in the market. So let's dive straight into it. News headlines are all along the lines of really sort of like talking about the PMIs at the moment. Eurozone PMI manufacturing index slipped to a 36-month low of 44.6 for May from 45.8 and below consensus forecast of a gain of 46.2. The service sector index edged lower to 55.9 to a 2-month low of 56.2, but slightly above expectations. New business remained subdued, and there was further divergence in inflation developments. Manufacturing selling prices declined for the first time since September 2020, but there's a further sharp increase in service sector selling prices. There comes inflation at a faster rate than April. Overall business optimism declined to a 5-month low. UK PMI manufacturing index declined to a 5-month low, 46.9 that came out at from 47.8 previously, and below consensus forecast of 48. Service sector index also edged lower to a 2-month low of 55.1 and slightly above expectations of 55, and slightly below expectations of 55.5. New orders increased at a slower rate on the month, while there was a marginal increase in employment. Input prices increased at a slowest rate since March 21, while charges also increased at the slowest rate since August 21, although price increases were still historically high. The US manufacturing PMI index retreated to a 3-month low of 48.5, so all PMIs heading lower. This is for the US. From 50.2 previously and below consensus forecast of 50. The service sector index, however, advanced to a 13-month high of 55.1 from 53.6 and above expectations. There was also divergence in orders with strong growth in services offset by a dip in manufacturing. The dollar touched a 2-month high after the US data on Tuesday, but drifted lower on Wednesday as the yen and euro managed to crawl higher. UK inflation data is due for release on Wednesday. Consensus forecasts are for a sharp decline in the headline rate to 8.2% from 10.1 due to the jump in prices last year, which will come out of the calculation. The core rate is expected to remain at 6.2. The Reserve Bank of New Zealand, the RBNZ, increased interest rates by 25 basis points to 5.5%, which was in line with expectations, although there was a split vote. There were, however, strong indications that rates were at a peak, which triggered sharp New Zealand dollar losses. Minutes from May's Federal Reserve policy meeting will be released later today. Markets will be looking for underlying assessment of the outlook and extent of the support from any move to pause rate hikes in June. And Bank of England Governor Bailey will be making further comments on the economy on Wednesday. These will be particularly pertinent given the inflation data release earlier in the day. So we'll see what goes on with those minutes later. Right, morning all, let's get started. We can dive straight into the cryptocurrencies. Let's take a look at Bitcoin and where the markets have gone over the last 24 hours. Remember, yesterday morning we saw a rally in Bitcoin. We saw the we talked about two potential formations, one on the daily chart, one on the weekly chart. Now the weekly chart looking slightly more positive with this inverse head and shoulders formation. However, there is this band of heavy resistance above where prices have stalled at, and we've retreated to around the neckline. The neckline for this break up higher was 25,400. Yesterday, we did manage to push nicely higher. The day before yesterday, and yesterday we've given up all those gains. Bearish engulfing candle has given up all the gains that we've seen since the start of the week. Well, most of them anyway. We can see quite a bearish move yesterday after price action broke up through the Ichimoku cloud on a 4-hour chart, but stalled at this resistance around the 27,500 area and then retreated lower. We're now trading around where the support is, 26,500, then further support down at 27,800. They're the levels to watch today. From an hourly perspective, we've seen price session breakdown really around the 4 o'clock UK time candle this morning. Ethereum, similar sort of price action, obviously to Bitcoin, and again we've got that head and shoulders formation on the daily chart, so price action retesting where the neckline, or just above the neckline at the moment, but looking pretty bearish after the overnight move, and potentially looking to reverse, and maybe the daily formation may take control. Levels to watch on here, really around about the 1875 level, on the supportive area around about the near term one, 1775. Below that we've got 1730 to 35, and that's quite a pivotal area that we've seen multiple times in the past. XRP, similar sort of price action again. The head and shoulders is not quite as clean, looks a bit dodgy here, but we've retested the neckline, this upward sloping neckline we've got, and we've seen the same sort of reaction lower. 45 cents is the support, then the next major support for us is 41 cents before 35.5. Let's take a look at, we're going to take a look at some Forex in a minute. Morning Mosh, morning Sadadid, nice to see you this morning. Let's take a look at commodities first. Let's try and run through it quickly. Cover it off in as much depth as we can in a short half an hour we've got available. So potential double top formation in gold. The neckline for this is around about 1970. We're seeing price action trading around here. We've also got a 1981 resistance level, was support level from the opens closes, really sort of like taking out the tails, and that's proved quite a nice, 1982 has proved quite a nice resistance so far, and yeah, we're looking at that as the main resistance this morning. Obviously with dollar strength, we'll see gold prices move lower. 1953 is the support level to watch this morning. We're seeing sort of like the bearish momentum since the sell-off from the 2067 level slowing down somewhat, but also the ranges are slowing down. So yeah, that's a little bit mid channel at the moment, looking for a break either way really to get this thing going, but dollar strength is definitely impacting on gold prices. Crude oil, very, very positive day yesterday. This went against my gun to head trade idea, and the price action moved up to that resistance level that we've got on the charts around about 73.60 level. Has done quite a decent job in the past. We've got an upward trending support coming in at around $71 this morning, and the more horizontal support down at 69.37. At the moment, we've sort of like bounced off this previous solid support level now at around about 64.40. That sort of like looks like quite a sort of decent candle, but if you remember, that was an overnight move and a very sort of aggressive move when the markets were shut and the price opened lower, but then reacted higher very quickly indeed. You don't see the same sort of action on the Brent crude oil. You can see the low here in Brent crude oil. This was shut when we had that gap lower. So you can see there's quite a difference in the gap here. But we're seeing the same sort of formation now. We're seeing this obviously horizontal resistance, and we're seeing this upward trending support line here. So that looks like a nice little triangle formation that we're forming, and looking for the break of that. Natural gas, also we've seen a reversal in natural gas. This is the daily chart. We've seen an evening star formation, and price action has reacted lower from there. We had this potential double bottom, broke through the neckline. The measured move target was up near the solid resistance line that we've got up here, the previous swing high 306. That comes in at 308, that projected move, but we're back down and below the neckline that we've highlighted here, but we are trading around support level of 250, so got that to hold on to. Right, let's take a look at some FX markets. Look at the dollar index first. From a daily perspective, we can see that 2-month high that we're seeing now. It's highlighted a little bit clearer on this chart. So you can see why we've stored around here. And again, we're seeing that double bottom formation. The projected move for that double bottom formation was 103.80, and we stored just in front of there. So that's not reacted too badly at all. We saw the nice break higher through the neckline, a little bit of a pullback, and then the push higher. A typical double bottom formation playing out really nicely. There's lots more going on in the dollar, obviously, and this is impacting on markets, especially like euro dollar, cable, dollar CAD. We could take a look at dollar CAD in a second. Let me just refresh the trading view charts, see if there's any more any more requests coming through. But euro dollar, really sort of looking at the strong support level that we've got, 107.62.5. We're trading very close to that now. We've got this head and shoulders type formation. I'll draw it on there on the daily chart. I haven't drawn it on there yet. I'll normally leave this to Joe to take care of. Oops, not very good drawing, Steve. That was the typical top-in formation that we saw. We broke through the neckline, didn't retest it. Normally you get a retest and then the extension lower, and that's played out pretty nicely indeed. The major move target for that neckline was around about 108.50. Sorry, 108.40, and that's exceeded that. It's actually got down to a 161.8 extension level. So we've stalled around here, holding quite nicely, but further downside looks on the cards really on euro dollar. And if you look, I suppose if you look at the shorter term charts, you're going to get that sort of like battle of the short term against the more medium term move. Good potential for a double bottom here. Neckline we'll highlight here. 108.30 is the resistance level to watch. You'll find some sellers there, and below we've obviously got this support here, 107.60. They're the two levels really of support and resistance on the short-term basis that you need to be aware of. Cable has had a really nice bounce higher since 2 o'clock yesterday. Extended higher, but overnight the rally up towards the resistance at which came in at 124.70 has stalled and reversed lower, forming a shooting star candle on there, which will eventually form at 10 o'clock. So look out for that. And cable under a little bit of pressure, so we'll see how Bailey handles that later. He's definitely someone under pressure. Looking at dollar CAD, we'll take a little bit of a deeper look into this as Mosh has requested it. Let's run through the different time frames. Weekly chart, we've got this upward trending support line. We bounced off. Let's get rid of the fibs and just focus a little bit more on the actual trend lines. The rally higher stalled on well, this is last month, the week of Monday the 24th of April. That's a month ago. Stalled around that 136.68 level and reacted lower. Again, we've got this upward trending support line coming in on the weekly charts, 133.26, up against that 136.68, and above that the major resistance of 138.70. So a little bit of a corrective move we're in at the moment. Let's take a look at the daily chart, and we've extended nicely higher after posting this bullish hammer on the 8th of May. The extension high really happened last Thursday, sorry, a couple of weeks ago now, Thursday the 11th of May, and the move higher has come up against a little bit of a resistance here, coming in at 135.65. Very positive overnight move in dollar CAD, as we saw in oil as well. And that 135.65 is the next test of resistance. Overall looking quite positive. Got a nice upward trending support on the short-term charts, coming in really around about the 134.86 level. That'll be a real decent test, and you can see the momentum is to the upside on the shorter term basis. And what I like to see on the short-term charts is that break above the Ichimoku cloud and holding there, and a nice strong candle. This is a 6 o'clock 4-hour candle, so this will complete at 10 o'clock, looking very strong indeed. So looking to maybe retest that 135.67 level. Hourly chart also confirming what's happened over the last couple of hours. Nice break above that 135.11 level. Support will probably be a little bit higher than that now. As you get this Ichimoku cloud sort of projection, it's a forward projection support level, so that should come in around about the 135.17 level. Hope that helps, Marsh. Right, let's take a look at some indices. And indices took a bit of a hit yesterday. We'll start with the DAX. Start with the daily chart, and we can see the extension higher from last Friday is the highest. It looks to be sort of like the all-time high. Looks to have sort of like really put itself in place now. That was 16,333, and we are now trading almost. Well, we're trading 350 points lower from there and looking to extend lower again today. The support level was 16,000. We had that on the chart. We've broken through there. We're trading just below it. So not a great start for the DAX. And you can see that we should find a little bit of support, maybe even from this reverse trend line coming in around about the 15,960 level. But this is quite a sharp acceleration downwards. Wouldn't be surprised if we saw some sort of consolidation because this is quite an acute angle to sell off at. Similar sort of price action in EU50. Right now we're hitting that 4,290 reverse swing line, reverse trend support. And that's coming in now. So that's looking pretty weak as well. Real big turnaround in the indices over this week. Bit of realism hitting the indices. Let's take a look at a couple of the daily charts to see how Dow's performing. We've got some horizontal support coming in at just below where we are now. That's 32,984. Breaking down, as we see, from that last Friday's bearish engulfing candle. So the Europeans are lagging a little bit behind the US at the moment. Nasdaq has had a turnaround, and we've broken back down that that sort of like the August 22 high that we took out at last week. It was the bearish outside candle formed yesterday. It's pretty significant. We should find a little bit of support further down, 13,500, trading at 13,722 now. Oh, sorry, just trading below there, 13,672 now. And yeah, that's looking pretty negative. So all the pressure on the indices at the moment. Again, S&P broke through that resistance, but stalled and reversed sharply lower yesterday and looking pretty weak. So all indices under the cosh. So let's take well, that's it. We've covered off the any other requests, pop them up, let me know, and I'll try and get to them. We can take a look at the what we do next, really. The gun to head trade idea. Now, I've had a bit of a hard time of this of late. This is where myself and Joe both pick a trade, and with that trade, we do it live on the show. We put it onto a live account, which we've been running since the start of the year. We place a stop and target, and it has to have a minimum of a risk reward of 2 to 1. Trades close at 9 p.m. or if they hit the stop and target. I know all about hitting the stop over the recent few days. We risk 1% of capital. That's a very, very good way of trade management and keeping yourself in the game for the long run to learn more and more about the markets and how they can be so cruel. So let's take a little look. What I do like to do is to run through markets and really look at the different time frames, consider the weekly and the daily, see what's going on them larger formations, when also looking at what's going on the short-term charts. FTSE seems to be breaking aggressively lower, seems to have done its job up there, and DAX as well, looking very aggressive to the downside. EU 50 taking out that low. All feels a little bit too late. I'll be nervous about getting in when we're just hitting or just approaching them support areas, 4282 in EU50 as well, the horizontal support. So this feels like I've just missed that opportunity on the Yeah, on all of them really. So let's take a look. What do we consider on gold? Has gold got an opportunity of some sort? Feels like it has. A bearish outside candle on the 4-hour chart leaves it open for further downside price action. And also obviously we're expecting some dollar move later, but also one of the ones to think about is the minutes in the dollar. They're talking about slowing rates down, and obviously Bank of England coming out with inflation numbers, and that could impact on the markets as well. So I'll take a look at sterling against dollar or cable. Nice little bearish engulfing after a shooting star candle on the hourly chart. For me, it's done the job. We got the weekly chart bearish outside candle, daily charts sort of breaking down, and the short-term charts shooting star on a 4-hour chart, and shooting star followed by bearish engulfing on that hourly chart. So that gives me a little bit of artistic license, shall we say, to sort of like get short. Let me go to the Oanda. That's where our account is with. Bring up cable. Here we go. And what we'll be looking at is getting a short position. We have to hit it at market here. I'll have to put the stop somewhere around that area. And obviously it runs out at 9 o'clock. That real breakdown has made things a little bit tricky, but that's around about where we'll go. Really wanted to get the stop above the high of here, 124.49. So yeah, get the stop above there, and let's get the trade on. We want to sell at market. Stop loss, we want to risk 1% only. And the stop is going to be at 124.56, risking that £19.37. That's where our account is, £1,937. And the target down at 14.6. Let's get that on. Risk reward 3.18. Or 3, just a little bit higher than that when I put the order in. So that's where we're getting short, looking for this cable move to continue lower. Let me just, oh, sorry, didn't share this chart. Yeah, this is where, so let me just run through that. Thanks, Mark, wasn't sharing my screen there. Weekly chart, bearish outside candle. On the weekly call, bearish engulfing, you probably is more apt. Breaking down. Daily chart, stalled at resistance, reversing lower, a little bit of a shooting star type candle there. But the 4-hour chart, obviously stalled in front of that Ichimoku cloud and reversing sharply lower. Obviously that doesn't complete till 10 o'clock, but that looks like a shooting star candle at the moment. And the hourly chart, again, shooting star on the 7 o'clock candle, and the extension lower, bearish engulfing the sort of like the break through that cloud, and the reversal lower below the cloud. So that's what I'm looking at for the cable. Hope you can see that now. Thanks, Mark, for heads up on that. And Sanadid. One request we had was maybe New Zealand dollar yen long. Let me have a look at that. New Zealand dollar yen. Right, let's take a look. I know it'll be on my Forex charts. Oh, New Zealand dollar yen long. Now, what are we looking at? Weekly chart looking pretty poor after stalling in front of the horizontal resistance and the highs that we've seen from September and December last year. Nice reversal candle really on the weekly. Daily chart doesn't look great either. We've sort of like, I suppose that's very close to a bearish engulfing candle, and the extension lower overnight has been pretty aggressive. I suppose you could sort of like see some sort of, can we get some sort of trend line going from here? Okay, we're broken through that trend line to the downside. We've got multiple touch points, 1, 2, 3 points, broken through on the 4th. The cloud, the 4-hour cloud, could this do a job? We are running into this sort of like area of support, I suppose, here. That could sort of like do a little bit of a job support wise along with the cloud. I'm struggling to find reasons to get long on this. That's a pretty aggressive breakdown. Now, obviously, it always, let's get a Fibonacci on there, see if we can do anything on the short-term chart. Try my best here to give a case for a long position. Well, we have broken through aggressively. Obviously, this hourly candle, you can see the interest rates impacting on New Zealand dollar yen. They're saying that they're sort of like this, they're going to stop the interest rate, potentially stop the interest rate rises around 5.25%. This has led to a break in New Zealand dollar strength against the yen currency. The break obviously happened between that 3 o'clock, 4 o'clock candle UK time, broken down quite aggressively, and we've stalled, or we've just hit 61.8. I can't really say we've stalled because although the candle, that 7 o'clock to 8 o'clock UK time candle is a doji, that's an indecision, but we have now taken out the low of that, potentially breaking through this 61.8% fib retracement level. So although the market has had this really big move, and it's very tempting to just think, oh, it's had a huge move down, let's get long of it because it can't carry on. I mean, these markets can carry on, but this is quite an aggressive move to the downside, and I always look for opportunities like this when I'm a bit of a contrarian trader. So I would look at this opportunity and think, right, okay, let me look at shorter term charts. Let me look at maybe the 30-minute or the 15-minute, or break it down to the 5-minute even, to try and get some sort of reason to go against this move lower. But that looks like a little bit of a unexpected point in the market where that break has been quite significant. If you are thinking about getting long of this, I would definitely look for maybe a shorter term chart to give you that indication. But obviously, you're looking at the short term chart. The targets are short term as well. So you're looking for a potential double bottom here if it breaks back up through the 85.25 neckline. But then you shouldn't really be looking for any more than a move to 85.60 or something like that. So yeah, that's my thoughts on it. Mosh saying saw a trend and saw the 61% pullback, so I thought there might be a chance. Yeah, there might be a chance, but at the moment I would just sit and wait for that reversal. But remember, if you do see that reversal on a shorter term time frame, the targets should be placed accordingly to that shorter term time frame. Don't think, oh, we've broken back, we formed a double bottom, so it's going to go all the way back up here on a 4-hour or a daily chart. It's stick to the time frame that you're looking at. That's my opinion. So yeah, hope that's understandable. Okay, well, yeah, we're on. I'll show you there we are. We're 23 pence offside on that short in cable, and got our fingers crossed for a move lower on that this morning, just to suit our position, not for anything else. Okay, let's take a look at what we've got coming up. As we've said, 2 o'clock, Bank of England Bailey comments, 3:30, the US oil inventories. That could buck the trend there. And 7 o'clock, we've got the Federal Reserve minutes. So plenty to sort of keep us on our toes and keep us enjoy the market. I have covered euro dollar, so that can, if you just rewind, you'll see it there. We're up on 30 minutes. Thanks for joining us. It's been wonderful, and we'll see you tomorrow. I won't see you tomorrow. I'm away Thursday, Friday. I'll be back Monday, but Joe I'll leave you in Joe's capable hands. So good luck, and we'll see you again. Cheers.